Welcome, ladies and gentlemen, to Commodity TV in the new edition of our online interview series. Today, we want to talk to Sibanye-Stillwater, the world's largest platinum palladium producer and number 3 in gold in the world. And with us here is this morning, directly from South Africa, James Wellsted. How are you?
Morning, Jochen, and morning to your viewers. Very good, thank you. And yourself?
Yeah, perfect. Thanks. All fine, especially when I look at your Q1 numbers, because I'm a long-term shareholder in your company and I always enjoy a beautiful double-digit dividend yield. And yeah, you guys did, again, an exceptional job. Please comment a bit on your first quarter here.
Yeah, the quarter was, I think for everybody was a bit of a challenging quarter because of some of the global events. I mean, we've still got COVID obviously impacting, particularly in China at the moment, but impacting on supply chains and impacting on the global economy and uncertainty about the future. And that was compounded obviously with the Russian invasion of Ukraine and the uncertainty that's added to the global economy, volatility in prices, etc. But I think we had a reasonable quarter. I mean, a very successful quarter, actually. Again, driven mainly by our South African PGM operations, which continue to operate very steadily and with very, very good margins. And that's countered some issues we had at our gold operations. As you know, last year we took quite drastic steps to try and arrest some of the safety issues we had experienced at our gold operations, which included suspending some of the operations, our Beatrix operation in particular. And that only really resumed production in February. So a month was lost there. And then we've also experiencing a strike at our gold operations, which began in the beginning of March. So we haven't produced any gold since the beginning of March. So given that context, reasonable results, similar results from our US operations, although we have seen some slightly higher costs coming through there, much like other mining companies are experiencing globally. But in that context, it was quite a good result. We delivered about $900 million of adjusted EBITDA. It was lower than last year. I mean, last year it was about 1.3 billion. Mm-hmm. But this is still, other than the first quarter of last year when we had by far the highest PGM prices we've ever experienced. If you remember with the supply side disruptions that Norilsk experienced and Anglo Platinum experienced, which drove rhodium up to $30,000 per ounce. That was really record prices. And this is, after that quarter performance, the highest EBITDA that we've had as a company or a group since we began in 2013. So the outlook's still very, very positive. We're generating very good cash flow. And even with the pullback in prices that we've seen and the volatility in commodity prices, we're in a very, very strong financial position.
Mm-hmm, super. You touched already on the strike. So what's the status there? When do you hope this could be solved?
We're continuing to engage with the unions, but it has been going on. I mean, we've been engaging for about 11 months now with the unions, almost 11 months. So it's been a very extended period. The strike began, as I said, on the 9th of March, and we locked employees out on the 10th of March. 2 of the unions actually then unconditionally accepted our offer, the offer we had made. We've subsequently increased the offer again in order to try and find a solution to the deadlock that we're in. But the 2 unions who are out on strike have been very rigid in their demands. And quite honestly, we're not going to give in to those demands. They double-digit increases, and we've offered already, trying to take into account the high inflationary environment, we're offering inflation slightly above inflation increases, but we can't continue to absorb double-digit cost increases in our operations. It will affect the sustainability of the businesses, and it will impact on all stakeholders, including our shareholders, and we just cannot allow that.
Yeah, absolutely. No, that makes also no sense, because then there is open for double digits again next year, and this makes no sense for the business. I fully understand that. If we look at the South African business also, I saw your chrome sales jumped really significantly. I think that is great. How did that come? I mean, price related probably also?
Yeah, it is. So we produce quite a lot of byproducts as a normal course of business at our SAPGM operations. Remember, we report what we call a 4E basket, which is platinum, palladium, rhodium, and gold. But then we also produce the other PGMs, which are quite important, being iridium and ruthenium, and are going to be important in the future hydrogen economy. And then we also produce other byproducts, being chrome, quite a substantial amount of chrome. I think we're the 5th largest producer of chrome, actually, globally as a byproduct. And we also produce nickel and copper as byproducts. And all of those prices obviously have increased significantly with the conflict in Ukraine and the uncertainty of supply. And as a result, we benefited from that. But we have been increasing our chrome production year on year, with the acquisition of new companies, Marikana, for instance, and then also with improvements on the recoveries, etc. We built new plants, we've improved the technology. The other companies that we acquired, Rustenburg, Marikana, and Kroondal, didn't really focus on chrome. Prices were low at the time. It was seen as more of a, they would allow other companies to mine it almost for nothing and take it away. But we've put a big focus on it, and it's become a big generator of revenue for us.
Okay, super. Also, I saw you are investing in Africa. There's the K4 PGM project, and also, what is it called? The Burnstone project. How is it going there with the investments?
So there were 3 projects that we approved last year, K4 being one of the biggest. That's about 4 billion rand investment. And we've now developed it. We actually announced last week that we've now hoisted the first rock. So we are about to start production from K4. It'll probably begin in the second half of the year. We'll report first production from K4. We already have commissioned, and it's already running at full production, was a smaller open cast project called Klipfontein, and we've actually already paid back the capital on that within less than a year. So very, very high return projects. And because a lot of the capital was already pre-sunk, K4 was effectively developed by Lonmin and then shut down in 2015. And all we are doing is we're now completing that project. So it's low capital intensity, very quick payback, and very high return. And the same with Burnstone, which is a gold project. It's in another province. It's not at our operation, so not brownfields, but again was pre-developed by another Canadian company called Great Basin Gold some years ago. And now what we're doing is completing the capital on that project and then developing the ore reserve to enable about 140,000 ounces of gold production over the next 20 years. Unfortunately, the strike has impacted that schedule, so there will be some slight delays at Burnstone, but the PGM operations are going according to schedule.
Super, but that means not that the gold is going away from the ground.
No, the gold's still there, and it will be mined. It's just obviously not as soon as we'd like it to be.
Exactly. Super. Okay, let's move to Calibre, to Finland. That's a lithium project. You just brought out a DFS, which looks, to my understanding, extremely favorable, I must say. And I saw you have cash costs of approximately 4,200 euros per ton. Where do you see there then the final, let's say, all-in costs approximately? I know it has to be a hypothetical projection. And also, if we look today at those lithium prices, the LIOH prices, I mean, you calculated with almost $25,000, and we are already at $70,000 per ton. So it looks to me like that could be a big future cash cow for you guys.
Yeah, and certainly, I mean, we identified the lithium opportunity or in the lithium market, some time ago. We've been doing a lot of work on battery evolution of the battery, the chemistry of the battery, which metals would be significant. And last year we did 4 transactions in the green metal, as we call it, space, which included 2 lithium projects, and Calibre being one, located in Finland, very close to end user markets in Europe. So where there are a lot of gigafactories being built. We also have the Sandouville nickel factory, which we acquired from Eramet, which we're currently integrating. And in time, we hope to build a nickel sulfate facility there to supply that battery metal into the European market as well, and potentially battery recycling, which I think we've discussed before. So that's very exciting. You know, all of those projects were acquired last year. The metal prices, as you say, were much lower. When we acquired Rhyolite Ridge, for instance, which is based in Nevada in the US, we were using $13,000 per ton lithium carbonate equivalent. And here we are, as you say, sitting at $70,000 per ton. So the economics of these projects are significant, and positively, Keliber is now quite advanced. They also received permitting approval to build the processing facility at Kokkola in Finland on the coast. So that's going to go ahead. So I think in the second half of this year, we'll start to see the development of that project. We're currently just looking at the project financing, and we are looking at potentially building our stake in that project up to over 50% before the end of the year. But those discussions are currently taking place. So very, very exciting, and it looks like it's going to be a very positive project for the business.
Super. When do you think all your, let's call it, battery or alternative metals, renewable metals, will kick in then really into the Sibanye-Stillwater account? How do you see a bit like the timelines?
On current assumptions, I think we're looking at post 2025. You know, obviously the project approvals, etc., are going through. Rhyolite Ridge, there is an environmental issue that we are dealing with that we'll need to finalize before we get permitting. So that might only happen in the next year, in 2023, and then there'll be a 2 to 3 year build up to production, to commercial production. So probably from 2025. But obviously, there will be a bit of capital that will be invested prior to that.
Okay, super. Given the fact that you are the largest recycler of auto catalysts already, now you want to go also into, let's say, battery recycling with the Eramet facility you have bought. What are your longer term plans with recycling? Could you imagine that you are really ramping that business more up?
Yeah, the intentions are to do that. I mean, I think we'd like to grow our PGM recycling business, which is already one of the largest in the US. We'd like to grow that business, and we are looking at doing that. But we also see the opportunity. I mean, it's part of this, what is going to become increasingly a bigger part of metal supply is the circular economy. So secondary supply from the circular economy. And we're already involved through our PGM recycling business, and then also our tailings dump retreatment business in South Africa, DRD Gold, that we've partnered with. We got a 50% stake there. And then also New Century in Australia, which is a zinc, currently processing zinc tailings, but looking at moving into copper and other metals. So with the increasing focus on social and environmental issues, I mean, we've already seen how difficult it is to permit new projects globally, mining projects. So we do think that there's going to be a bigger role for the secondary circular economy supply, and we want to be key providers into the European and US markets of those key metals. So yeah, that is going to be a big focus area of ours, along with, as we've just discussed before, the uranium side of the business, where there's a lot of value to be unlocked in future.
Yeah, absolutely. I mean, it's not only unlocking value, but also I think ESG-wise, that helps the rating significantly, because recycling is recycling. You cannot do better, right?
Yeah, listen, it's the greenest metal that you can get. Yeah. So certainly it's in line with our focus on sustainability and making a difference in the future global environmental change, and actually making a positive change rather than a negative change.
Okay, super. If I look back on your history, I mean, it is fantastic market conditions for you today. If you want to look at, let's say, other companies to buy more projects which make sense for you. So what is your financial condition these days? What is debt? What is cash in the bank? I think you are net debt free, right?
Yeah, we were in a net cash position of about 0.2 0.2 times net cash to adjusted EBITDA as at the end of last year. We're obviously generating very strong cash flows at the moment. So we are in a very solid position. I mean, one of the issues we were facing at the beginning of the year was, the opportunities were getting more and more difficult, or value accretive opportunities were getting more and more difficult to identify. But I think, if we do see ourselves going into further weakness in metals associated with concerns about a global recession, perhaps, then obviously we're going to see some of those prices pulling back. And there may be very good opportunities. And again, we're going into what could be a down cycle or a period of lower prices with a very, very strong balance sheet. And that's really where we've created a lot of business in the past, is buying and counter-cyclically and taking advantage of these kind of downturns in the market.
Yeah, it makes more sense to buy low than high, right?
Sure.
Yeah. Super. Last question about dividend, because we get those questions always from our viewers. You paid already the first part of the dividend this year. So when will be the second part of the dividend? Because you pay normally semi-annually, right?
Yeah, so we paid the dividend we paid was actually the year-end dividend from last year. So we'll we'll announce or declare the next dividend in August when we have our H1 results. Again, our AGM is next week. One of the resolutions as well is on a 5% buyback of our shares to get approval for that. As you know, last year we also did, in addition to the 10% odd dividend yield that we rewarded shareholders with, we also bought back 5% of our shares. That was about a $575 million buyback. So again, if we are holding surplus cash, obviously considering the opportunities that are out there and whether we can continue to add value through M&A and other processes, we will also look at obviously returning surplus cash to shareholders, whether it's through a buyback or a special dividend or the like.
Okay, super. James, that all looks great. Thank you very much. And I hope you get the strike soon solved, that things are going the normal way also for your employees, because they are now without any income, right? And so from that perspective, I really hope that those unions get back to the normal path. And all the best for you. Thanks, and look forward to my next dividend.
Thanks, Jochen. And certainly, I mean, we hope to get our operations all back on track and contributing positively to the business. So the outlook is quite good. Thank you.
Super. Thank you. Yeah, ladies and gentlemen, there was James Wellsted from Sibanye-Stillwater. You heard it. Everything is in good shape. Despite the strike is still going on in the gold section here in South Africa, but hopefully that will be solved quite soon. But all the other businesses are doing extremely well. And so the company had already a very good first quarter still. And they are net cash positive, meaning they have more cash in the bank than debt. That is always very healthy. And in that market environment, they are probably will go on to a shopping tour, hopefully, which makes absolutely sense, because now you can get again for really low prices, very good projects. And what we really also like is that the circulation economy is more and more getting important with Sibanye, which we really appreciate also, because it makes the most sense. As James said, that is the best no emission metal, is the recycled metal, if you want to take it like that, and the most easy mind, of course. And the company is doing great. You really should consider at those low share prices Sibanye-Stillwater, because with the share buybacks and the dividend, we look again probably to a plus 10% yield this year. And I'm a shareholder of the company. I'm doing extremely well with that, and you really should consider. Thanks for watching us, and bye-bye from Switzerland.